Dear students, we will do module 56. This is the fourth head of income, capital gain. So in this module, I will explain the theoretical concepts about capital gain. So it's a theoretical module. They just give the explanation. So here, basis of charge. Section 45 is giving the explanation about the basis of charge for capital gain. Under section 45, subsection 1, any profits or gains arising from the transfer of a capital asset effected in the previous year shall save as otherwise provided in section 54 be chargeable to income tax under the head capital gains. So this is the chargeability. We have to explain this. This is the definition, and shall be deemed to be the income of the previous year in which the transfer took place unless such capital gains are exempt under sections 54, 54B, 54D, 54EC, 54F, 54G, 54GA and 54GB. I know that you will not get any idea when I am reading this definition. So the sections I mentioned, these are the sections we are going to learn in detail. So just the features if you derive from this definition, 2 points are important. Income arising from the transfer of a capital asset is charged under this head. Second is it's effected in the previous year. So here, what is capital asset? See, for example, I have a house property. I bought it in 2000. Now in 25, I want to sell that. So that's a capital asset. So when I get some profit, if I get some profit or loss, it's treated under this head. So items not included in the capital asset, any stock in trade, because the business they are using like raw material, the stock in trade they are using for the business, it's not considered as capital asset. Personal effects of movable assets like car, furniture, all that. Agricultural land in rural area, 6% gold bonds 1977 or 7% gold bonds 1980 or national defense gold bonds 1980 issued by the central government. Special bearer bonds 1991. Gold deposit bonds issued under Gold Deposit Scheme 1999. Deposit certificates issued under Gold Monetization Scheme 2015. When these items will come in the computation, we have to exclude that. So that is the importance of this explanation. Next is, what are the examples of capital asset? We know that capital asset, gain or loss arising from capital asset is charged under this head. So examples of capital assets, land and building. That can be residential house, commercial property or vacant land. Second, shares and securities listed or unlisted in stock exchanges. That can be equity shares, debentures, bonds, mutual fund units. Next, jewelry, gold, silver, diamond ornaments, precious stones or artistic works. Vehicles, car, boat or any other mode of transport held as investment. Goodwill of a business or profession. Acquired or self-generated goodwill. Leasehold rights. Rights over land or property. Intellectual property rights. Patents, trademarks or copyrights. Rights in or in relation to an Indian company. For example, right to subscribe in shares. Foreign assets, property, shares or investments located outside India. Now, the one good example or one important point I am going to tell you for this chapter, two types of capital assets are there. So, short-term capital assets, it's defined under section 242A. 242A, short-term capital asset. Long-term capital asset, section 229A. So, this is important. What is short-term capital asset? What is long-term capital asset? Usually, they will ask for examination. Then you can quote the section also to score full marks. So, short-term capital asset, the definition is divided into two. This is with the introduction of the new scheme. Up to 22/7/24. That means July 22, 2024. Capital asset held by an SSC for not more than 36 months. Immediately preceding the date of transfer. Then it used to be called as short-term capital asset. But with effect from 23/7/2024, that means July 23rd, the next day, capital assets held by an SSC for not more than 24 months, immediately preceding the date of its transfer. See, earlier when we used to deal with short-term and long-term, period of holding will be 12, 24 and 36 months. Now the new scheme is bringing it to 12 months and 24 months. That is the definition. You can see that it's divided into two parts. Now, short-term capital assets, there are exceptions to this general rule. Short-term capital assets held for not more than 12 months before transfer. We were talking about 24 months. Now it is not more than 12 months. These are, if it's not more than 12 months, then it's considered as short-term. Examples, equity or preference shares of companies listed in a recognized stock exchange in India, securities such as debentures, bonds, government securities, derivatives, etc., which are listed in a recognized stock exchange in India, units of an equity oriented mutual fund, whether being quoted in a recognized stock exchange or not. Then units of UTI, Unit Trust of India, whether quoted in a recognized stock exchange or not. Zero coupon bonds, whether quoted in a recognized stock exchange or not. This explanation is important when we will do the computation. So again I will explain that these are the theoretical explanations. Now, short-term capital assets, holding period up to 24 months. Unlisted shares of companies may be equity or preference shares. An immovable property being land or building or both. So here also it is considered as short-term capital asset. Now I will give you one important table, type of capital asset. See, the period of holding is important. If it's listed equity shares, equity oriented mutual funds subject to securities transaction tax, that is STT. If it's more than 12 months, it's considered as 12 months. Up to 12 months, it's considered as short-term capital asset. Second is unlisted shares, meaning not listed in any stock exchange. If it's held for more than 24 months, it's long term. If it's up to 24 months, it's short term. Immovable property, land, building, house property, long term capital asset more than 24 months. Up to 24 months, it's short term capital asset. Other capital assets, that is jewelry, debt, mutual funds, bonds, etc. More than 36 months is long term, up to 36 months is short term. So this table will help you to distinguish between long term and short term and long term capital gains, and that will be your guide for working out the problems. To distinguish between short term and long term capital gain, that is a vital factor in doing this problem. Long term capital asset, we are coming to the last conclusion. This is defined under section 229A. Here also this definition is divided into two, up to 22/7/24, that is July 22nd, 2024. Assets held by an assessee for more than 36 months immediately preceding the date of transfer, with effect from 23rd/7/24, that is 23rd July 2024. Capital assets held by an assessee for more than 24 months immediately preceding the date of transfer. So 12 months, 24 months and 36 months. As per the new scheme, it's coming to 12 months and 24 months. So that is 12 months for short term and long term 24 months. Like that, they are reducing the period of holding. Now, long term capital assets, exceptions to long term capital assets period of holding, held for not more than 12 months before transfer. Equity or preference shares, held for more than 12 months before transfer. So here, long-term capital asset, equity or preference shares of companies listed in a recognized stock exchange in India. See, up to 12 months it's short term, more than 12 months, then it's long term. Securities such as debentures, bonds, government securities, derivatives, etc., which are listed in a recognized stock exchange in India. Units of an equity oriented mutual fund, whether being quoted in a recognized stock exchange or not. Units of Unit Trust of India, whether quoted in a recognized stock exchange or not. Zero coupon bonds, whether quoted in a recognized stock exchange or not. Now, similar, just like short-term capital gain, long-term capital gain, if holding period is more than 12 months. Unlisted shares of companies may be equity or preference shares, and immovable property being land and building or both. So, this is the basic definition and explanation I want to give about the theoretical concepts of capital gain. This will help you in doing the problems, and understanding these concepts are very important. So as the explanation progress, I will give you the wherever it's required. So thank you for your patient listening. Happy learning. Thank you.